I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know. Are we or aren't we in a recession? That's a question on the minds of many this week as data show that the U.S. economy shrank in the second quarter, marking 2 consecutive quarters of mild decline. Consumption grew as households spent, but investment activity lagged as higher interest rates dragged opportunities. Nevertheless, the labor market remains on solid footing, with jobless claims declining slightly this week. And although consumer confidence slipped, a majority of respondents continue to say that jobs are plentiful. Before the GDP figures, the Fed met this week and announced another short-term rate hike, which brings its benchmark rate to just over 2%, nearing the neutral range in which policy doesn't encourage or dampen activity. Because the hike was widely expected and deemed a necessary step in fighting inflation, investors have largely cheered, with stocks climbing and longer-term bond rates steadying after recent declines. These dips helped drive this week's mortgage rate lower. Despite this pleasant surprise for home shoppers, in the big picture, mortgage rates remain higher than they've been over most of the last 14 years and are likely to remain at this level or higher. Alongside higher home prices, this ups the cost of buying a home. In fact, Case Shiller data showed that through May, the pace of home price growth eased slightly, but remained near 20%, or more than twice overall inflation. Amid higher housing costs, market activity continues to slow, with both pending home sales and new home sales declining slightly from May to June and compared to 1 year ago. As buyers grow more selective, Realtor.com weekly data showed that inventory increased, but a dip in the number of newly listed homes means that shoppers are seeing many of the same houses on the market. And for the first time in 2 years, days on market didn't drop, instead tying last year's level. In a special research study just released, we learned that investors continue to play a bigger role in the housing market, buying more homes than last year and growing their market share. While investors are selling more homes too, their buying continues to outpace selling, meaning they're a net boost to housing demand, competing with other home buyers. And finally, with costs soaring and flexibility still an option for many, the Emerging Housing Markets Index, a Wall Street Journal and Realtor.com collaboration, highlights affordable mid-sized markets, predominantly in the central U.S., including number 1, Elkhart, Goshen, Indiana, as areas for homebuyers to consider. You'll find the full list and other details along with our housing data for download at Realtor.com/research, and follow us on Twitter for real-time updates.